Next is your thin credits, right? Not having comparable credits can be like a resume with little experience. It fails to instill confidence. When you're working with these big banks and you're looking for 100,000, but you've only been able to show that you have 5, 10, $20,000 in comparable credit, it's hard for a lender to be say, hey, I'm going to be able to give you that much from that angle. So it's always good to work on your personal credit. Here's some strategies that you can do. Some of my clients that have, literally nothing on their credit profile is a blank slate. I'm like, okay, what's the first thing I'm going to do to help that person get a score? Authorized users are a great tool. If you have any friends, family, anybody that you can leverage their cards as an authorized user, as long as they're in good standings, high limit, low balance, longer establishment is going to help you. You add a few of them out there, your score is going to be 700, and from there you can go and get. I've gotten somebody in American Express or a Discover, Capital One. These are all certain ways. Even just having AUs, again, not huge limits because they're going to discount it from that portion of it. However, again, just starting from scratch. So if you are in the credit repair, phase and you haven't been able to build new positive trade lines right now, I would recommend either doing the Navy Fed pledge loans, the secured loans from like a Credit Strong or anything comparable to that. There's a lot of new fintech lenders out there like that will just look at your banking activity, right? If your paychecks or your business, like Pedal and Tomo are just some examples. A lot of them out there right now. You can do rent reporters. There's Experian Boost, Sellerfi will look at your utility bills, and so these are all certain elements that I would start building as many positive accounts, even though if you're not able. But if you can do the secured, credit cards with the big banks or the tier 1, tier 2s, then I would recommend, doing that if possible. Again, we're all in different financial, scenarios, and you just have to be able to see what's best for you from that. All right, so I get this common question: when should I close out my credit building trade lines? Okay, and so the answer here is once you have established positive credits, which won't impact your older trade lines. Okay, so if let's just say that you have your tier 1s, which is your Bank of America, Citi, Wells Fargo, and Chase's, your tier 2s, your American Express, Discover, Capital One. If you can do, once you establish yourself with a good credit score, again, you have enough, and now you're getting these big cards that we want to look and establishing. Then at that point, once you've increased your lines, you have some age, preferably over 2 years of seasoning, and you have at least, let's just say 5 or 6, 10 of those revolving accounts or installment loans. At that point, you have now a thick file which you can afford to get rid of the younger ones, right? The credit building ones. Because if I had to choose between just going straight into the if I had to rebuild from scratch, then that might be, more activity and having more trade lines and data is, I think, a better choice versus just having fewer, with just the major ones, even if it's in a secured aspect. Hopefully that helps with some strategy of rebuilding yourself. All right, excessive inquiries, as we all know, no more than 4 to 6 within a 6-month period, sometimes even 12 months. Some lenders may look at the full 12 months of how many inquiries you've had, right? But each inquiry is like a pebble in your shoe. Too many, and the journey can become painful. All right, and so removing those inquiries is definitely, key. Just wanted to give a real quick, demo of something that we've done for one of our clients. This client right here had 21 on TransUnion, 40 on Experian, 9 on Equifax, and then within what was it, a month, I believe, a month and a half, we were able to remove all of them. You can see how the score increased dramatically to 671 from there. So 2 on TransUnion, 13 on Experian, and 4 on Equifax on removing 51 inquiries. Again, these are all certain things that we've done for many, many clients. Of course, I can't provide the financial, the personal information from over here. But wanted to give you guys a real quick study. Just a little bit of a 2mm shift can make such a big difference. As you can see that this client, when we first started with him, he had a 666 credit score with a 55% utilization. You You can see 62,000. Now we worked with him on our debt reduction strategies, right? The 10 that I have already taught you. And by getting him down to the 10%, you can see such a huge jump, almost 100 points of a jump, from that in removing those inquiries. That then got him in line to get him a business loan for 80,000. We had him a few business credit cards for 87,000, and he wanted a personal loan at the same point, so we got him a 40,000 from there. In total, $207,000. But just wanted to be able to show this, how a small shift can make such a big difference in the outcome of what you're looking for. Speaking of, some credit repair, we had a client that really wanted to actually finance a car, and he didn't have a car. He was trying to move cross country from Maryland to Arizona. And when I looked at his credit, he had 0 positive accounts and 4 collections from that. Now, about literally 7 days later, we were able to remove the collection through my contact. But you can see how now he has no credit score, right? This is Credit Karma. It went from a 517 because he had no data. He went to a 4, which essentially means 0. And by adding 3 primary accounts and 1 authorized user, you can see how we gave him a 200-point jump in such a fast period of time. He was able to get the car and move forward. But I just wanted to show that to you of, look, your credit is just a mathematical equation. How many accounts do you have? Are they in good standings, low standings at all? And just by being able to remove the derogatories, it will make such a huge impact at this standpoint. So the fastest way to get funding is really to understand your CFP, right? Your current financial position. And just like a GPS, right? If you're going to a destination, would you want to know what your exact coordinates of your GPS addresses, where either Google Maps is going to tell you exactly where to go step by step and to get to your destination, or do you think you're going to be able to get there faster if you're flying blind, with a blindfold trying to get to your destination? Who do you think is going to get there faster? All right, so business credit, right? One of the biggest mistakes that we identify and we see is, number one, of course, your recent derogatories, late collection, charge-offs, very similar to your personal credit and everything that we go through. It also can show up on the business side, right? Same questions. Is it open or closed? Is it age derogatory? Is it seasoned, or is it still there? Now, if you have late, right, very different from your personal credit, where you have that 30-day buffer of paying your bill before it goes into a 30-day late on your credit report. With business credit, the creditor can report it if it's 1 day past the due date. So if you don't have it on auto pay, right, that's going to kill you. I'm going to show you an example of a business credit report and how that can affect you, from that. Vendor credit also applies. We had actually one of our Radikal clients that had literally, they just hit their 2-year mark. He had an 800 personal credit score, $1.3 million in business credit. I coached him on what to put on his net income so that he paid less taxes but still qualified for the banks. We literally potentially had about a $400,000 to $500,000 run, for him. But because he was in the construction business and part of the whole way of paying certain vendors a little bit late, it was part of the whole, it was just a common thing. Well, that situation with the vendor credit had a 30 or 60-day late, which literally killed 90% of his apps. Everything else was perfect. So it's very important, guys, to make sure that you pay your vendor credit and your creditors on time, especially not even 1 day late, from that. We still were able to get him 120,000, but again, a potential of 100,000 versus 400, right? You do the difference here. So what do you do if you do have some bad, elements on your business credit? Number one, you can attempt to dispute it. I would say that business credit is kind of like the wild, wild west. There is no, the FCRA rules don't apply as it does with business. Anybody can pull anybody's business credit anytime. So you can attempt to dispute it, but again, you're not governed by the same rules, so it does make it harder. Hence why there's not a lot of credit repair companies for business out there. Number two, another strategy is to be able to let that derogatory season. Okay, in that last example I told you with the construction company, right? Maybe a year or 2 years later, and he's been paying on time, that's not being habitual, and late. And a lender might be able to forgive that, just because, lenders do understand that things do happen. If you look at the overall picture, but again, these times in this recession, it becomes harder. It's very different from a late or a charge off. One strategy is starting a new company or an aged corp to bypass it. If you have a charge off that's, tax liens, public records, too many UCCs, MCAs, these are all certain things that you can then divert all your accounts and cash flow to a new or an aged corp, and you build up 3 months of business bank statements, and you're just diverting that traffic and setting it up. Remember, your website can stay the same, just the entity could be the difference, right? My company's called Deliver Capital. That's just the website. The corporate entity is Axel One Holdings. So if tomorrow I want to switch that over to something else, it's not going to affect my branding, right? It's a little bit more advanced, but again, if there's a will, there's a